Okay, thanks again for joining. This is Student Loans 101. I'm Katie Flynn, Editor-in-Chief at Saving for College. Saving for College is the leading independent source of information on 529 plans, student loans, and the best ways to save and pay for college. Education debt has been a hot topic for students, parents, college administrators, and even politicians. 44 million Americans have student loan debt, and total student loan debt in the US has topped $1.7 trillion. That's an increase of over 100% since 2010. And of course, student loan debt can be a major financial burden, and it's best to limit the amount you take out. But when you borrow responsibly, student loans can be an effective way to fill a college savings gap. So during today's webinar, we'll go over the best ways to pay for college with student loans and how you can create and manage a repayment strategy that will work best for you. I'll be serving as the moderator for today's event, and joining me are industry experts Shannon Vasconcelos and Debbie Schwartz. Shannon is Director of College Finance and Social Media at Bright Horizons College Coach, the nation's leading provider of education advising services to organizations and families. At Bright Horizons College Coach, Shannon delivers workshops and provides individual counseling on the college finance process. She helps parents and students understand the processes of saving for college and education loan repayment. And she also helps maximize tax breaks, financial aid, and scholarship resources that are available to them in a family-focused and ethical way. Shannon has been featured as a college finance expert in numerous media outlets, including The Today Show, Good Morning America, The Wall Street Journal, Forbes, Money, Consumer Reports, and U.S. News and World Report. Prior to joining Bright Horizons, Shannon worked in student financial assistance at Boston University and at Tufts University. Debbie is a former financial services executive with expertise in personal finance. She founded Road to College and the Paying for College 101 Facebook group to give families a resource to help them navigate college admissions and paying for college. As a parent and professional, she knew families needed better information and tools to help them make smarter college decisions and help become educated consumers of higher ed. So just a few housekeeping notes before we get started. As you know, we've collected questions during the registration process, and we're going to try to address those as we go along. But you can also type your questions into the Q&A box. It's possible that we won't have time to answer every question. So if we miss yours, you can go ahead and visit our forum at forum.savingforcollege.com, where you can ask your question there. We are recording this event, so you're going to receive a link to the recording and a follow-up email, so keep an eye out for that. With that, let's go ahead and get started. Debbie and Shannon, I'm so excited to have you both here today. Is there anything you'd like to say before we start taking questions?
Just welcome everybody, and I'm glad that you all are here and are thinking in advance about paying for college and the student loans you may or may not have to take to pay for college. And I hope that we can help you out in being an informed consumer and making some of those decisions.
Yeah, no, I agree. It's great that people are here learning. I'm curious if people, share in the chat or in the questions, like, where they are in the process. It's always interesting to know, has your child started high school? Are they in college? But wherever you are in the process, it's great that you're here to learn about student loans and figuring out how it can help you pay for college.
That's great. Okay, so here are the list of topics that we're going to cover. So when you see a particular topic on the screen, please go ahead and type a related question into your Q&A box. We'll also have links being sent out in the chat to relevant content on the savingforcollege.com website if you need more information. So why don't we go ahead and start with probably one of the most popular topics of today, and that's going to be the FAFSA, the free application for federal student aid. So why don't we start by just giving a brief overview? I'm sure Debbie and Shannon, you both have some input on this. What is the FAFSA? What's your quick explanation that we can get started with today?
So very briefly, what it stands for, FAFSA stands for Free Application for Federal Student Aid. It's a government form that you need to fill out if you want to apply for financial aid. It is used to award all the government financial aid that's out there, the federal government aid. Most schools also use it to award their own institutional aid program. So there are some schools that ask for an extra form. If you hear another term out there called CSS profile, that's another financial aid application that you may have to fill out depending on what colleges your child applies to. But in short, FAFSA is the main financial aid application for college.
And you'll probably hear the date, October 1st. October 1st is when the FAFSA becomes available for that academic year. And so people get a little nervous. Oh, well, October 1st, FAFSA. It's really not as difficult as a process as people think it is. And a lot of it, can be automatically set up between your taxes and the FAFSA form. But I think that some of the things to remember or know about the FAFSA that's important for families is that the information that is used and asked for is based on your tax forms from 2 years before your student is starting college. So for example, the students now who are going to start in 2021, their taxes that were used for the FAFSA were 2019, right? Is that correct, Shannon? I always I have to think twice about it.
You have to do the math.
Yeah, do the math. Yeah. So that's the important thing to know because the FAFSA really relies heavily on your adjusted gross income, which is coming from your taxes and your assets. So that's why people refer to something called the base year, and the base year is that first year of the tax forms that the FAFSA is going to use the information from. So I think what maybe trips people up is that they don't become aware of FAFSA until their child is a senior. And really, it's good that you become aware, but all of a sudden you realize, wow, that information was based on a time period which I've already passed and I maybe can't necessarily do anything for. And so that's the importance of trying to understand FAFSA, the process, financial aid as early as possible, because if you want to make any impact to what your financial aid eligibility might be, you really have to start, at the beginning of high school.
Yeah, and those just to follow up, those base years that Debbie was talking about that they're going to look at on the FAFSA. I saw in the Q&A box flying by, somebody asked if you have to fill out the FAFSA for all 4 years. Yes, you do. And so the base years, and they're always looking at your income from 2 years back. So they're going to be 4 base years eventually that the colleges will look at. And they start at basically midway through sophomore year of high school and run through midway through sophomore year of college. So if you were thinking of making some financial moves, that's why Debbie is saying start at the beginning of high school, because you want to think about it before those base years kick in.
Correct. And let me just emphasize one other thing that Shannon mentioned is that you do have to fill out FAFSA every year your student is in college. It's not just, that first time feels, not overwhelming, but, like you're indoctrinated. And, but then you do have to fill it out every year after. Sometimes people think that they don't, that they only have to fill it out that one time and it's valid for 4 years. And the reason why, and we'll emphasize this, I'm sure later on as we talk about loans, the reason why you need to fill it out every year is because FAFSA is the, as they say, the gateway to, federal funds. So unless you fill out the FAFSA in a particular year, that's the way you and your student are going to have access to federal student loans. So we can talk about federal student loans all we want. We can explain it to you, but unless you fill out the FAFSA, you're not going to have access to it. And so, sorry, I'll just even emphasize, because I think that there was a question about this. Somebody said, is there an income limit on how much I can earn to fill out FAFSA? No, there is none. So anybody and everybody, depending on your income level, you can fill out FAFSA and you will get access to the federal funds. So, that's why people say, well, I make too much, I'm not going to get financial aid. You might not get some financial aid, that's true, but everybody who fills out FAFSA will get the federal student loan or access to it. So that's a real benefit for why we push, and a lot of people push for families to fill out FAFSA.
Yeah, we did get a couple questions here just now about income and FAFSA, asking if it's worth it. So of course, it is worth it for everyone to fill out FAFSA, no matter how high your income is, or even if you think you won't qualify for aid.
Yeah. I
And
would
then
say
Debbie, I know you were wondering about the audience, and there is a lot of people here are commenting that they do have students in high school.
And I would just say, just to follow up on that, other reasons that you might want to fill out the FAFSA, even if you don't think that you're going to qualify for need-based financial aid. What Debbie and Katie just talked about in terms of accessing the student loans is a big one. Also, I found that sometimes people sort of underestimate those limits where there might be a cutoff. They heard their neighbor didn't qualify for aid, so they don't think they will. Rather than taking someone else's word for it, you likely want to give it a try and make sure that you're not going to qualify for financial aid. The only way to know for sure is to complete the form. Also, if you think you might have like a change in financial circumstances at some point, it could be good to get a FAFSA on file, just in case. Sometimes there are some schools that have kind of what I think is a nasty policy that if you don't apply for financial aid up front, they will never consider you for financial aid for your whole 4 years. I hate that policy, but it does exist. And there are also some schools that will not consider you for merit-based scholarships unless you have a FAFSA on file. So, for all, and I would say that's fairly rare, but it definitely exists. So before you decide not to fill out the FAFSA, you want to kind of go through that checklist and make sure that you're not potentially leaving money on the table. So those are just some things to think about.
Oh, that's really good to know.
I see there's a question. Frank's asking what if, it just scrolled away, sorry. But basically, what if your income changes from basically the tax year that they're basing the FAFSA on? What can you do? And if that's the case, you can appeal to the college and let them know that has happened, and they can do a professional judgment and look over your numbers. So things happen. Our financial situations do change, and you just have to notify the colleges about what is going on.
And never be afraid to do that. I sometimes talk to people who are intimidated, don't feel bad about asking for more. The financial aid offices want to hear from you. If things have changed, they understand the FAFSA is kind of a point in time, and that income was 2 years ago. So please don't be scared about asking. Don't be intimidated in any way. If that FAFSA does not reflect your true circumstances now, please ask. There's nothing the colleges can do if they don't know about it. So ask for more. It's a very normal process in a financial aid office to review these kinds of appeals. And what's the worst that can happen? They say no. Sorry, we don't have any more money. But you might be surprised really at how often they say yes. So yeah, it's something not to be afraid of at all.
And I'm sure, as you can imagine, this year in particular, with the pandemic, people's FAFSA was based on 2019 when there was no pandemic. So there was a lot of appealing or communication happening between families and colleges, where families were basically saying, I mean, my financial situation doesn't at all look like what my taxes looked like in 2019. And as long as you can document it and you explain and you show why they are different, and as Shannon said, the colleges will do the best that they can. So you just have to let them know.
Okay. Someone's asking to clarify if everyone, the statement about everyone having access to federal student loans, no matter how high their financial status is.
Yeah, that's the case. There's one government student loan called the subsidized direct loan that is need-based. So if your income is too high relative to the cost of the school, you may not qualify for the subsidized direct loan. But there is an unsubsidized direct loan that every student can get as long as you're a US citizen or permanent resident, you haven't defaulted previously on a student loan, those kind of basic qualifications. But even if you're, Bill Gates's kids could get an unsubsidized direct loan. And the term subsidized and unsubsidized, what that means is subsidized loans, the need-based ones, do not accrue any interest while the student is enrolled in school. Whereas the unsubsidized loan, not quite as good because they do begin accruing interest immediately. So those are available to just about every student, no matter what your income is. And then the other federal loan that I'm sure we'll get into is called the PLUS loan. It's a parent loan, a loan for parents to borrow to make up the difference. The subsidized and unsubsidized loan cover in the ballpark of $5,500 to $7,500 per year. If you need more than that, that's when you're going to a parent plus loan potentially. That also there's no income limitations on, but they do run a credit check on you.
Okay, good to know. Before we move on to the topic of how to get student loans, I know there's been some news recently and someone did ask a question about the FAFSA simplification being delayed by a year.
Yeah,
That just came out, was it this week or last week? I
Yeah.
mean, in the last few days
Last few
that was
days.
going to be delayed. Yeah.
Yeah. So for anyone who doesn't know what that was, what that refers to, there was one of the COVID relief bills that passed the end of December through Congress. They sort of snuck in there this that was like a 5,000 page bill. Snuck in there was this FAFSA simplification that was supposed to go into effect for the 23-24 school year. And then the Department of Education just announced in the last few days, it's going to take us longer to get some of this stuff done. We're going to phase it in and it will not be complete until the 24-25 school year. So the FAFSA simplification sounds like a good thing, and in a lot of ways it is. It will help a lot of people. There were other people that it may not help so much. They're cutting down the FAFSA from, I believe the numbers are, there's currently 108 questions,
Yeah.
reducing it down to 36. So that, is a huge improvement in terms of the intimidation factor and the difficulty in filling it out. Most of the questions are going to be pulled right in from your tax return. So it's going to make the form a lot easier to fill out. In doing that, some of the big changes that are going to affect people, they're removing a lot of the what we call untaxed income questions. In terms of saving for college, and I know, Katie, that you've written about this, a big one is they used to, if grandparents or non-custodial parents saved for their grandchild or their non-custodial child and then paid the college bill, that showed up as student income and hurt students a whole lot in the financial aid calculations. That's going away with simplification. It looks like 401k contributions are not going to count as part of your income anymore. They're changing who the custodial parent is. We haven't talked about that at all yet, but if parents are divorced, only one parent's finances are looked at on the FAFSA. That's the custodial parent. It is currently the parent that the student lives with the most. It's changing to the parent who provides more support. I think we're waiting a lot of guidance on how they're going to define that. Some not so great changes, I would say, for families are small family-owned businesses are currently excluded on the FAFSA. You don't have to report those as an asset on the FAFSA, the value of those small family-owned businesses. They're getting rid of that exclusion. So you're supposed to report kind of all businesses that you might own. And the other big one,
big one, I was waiting for it.
It's really upsetting a lot of families that have multiple children who are close in age. Currently, what the FAFSA does is it splits what they currently call the expected family contribution, is what they call this number that you are based on your income, your assets, they think you can contribute this amount to college. They split that, seems logically, between the number of kids that you have enrolled in college at the time. So if your EFC sort of total contribution is $30,000, but you have 2 kids in college, it becomes $15,000 a piece. And that opens up lots more aid eligibility for each child. But with the simplification, they are getting rid of that splitting. So if your contribution is $30,000, it's going to be $30,000 for child 1 and another $30,000 for child 2. So that's obviously something that is not great for families.
Did you ever hear? I don't know. I haven't read anything, Shannon. I'd love to know if you. what is the rationale behind that change? I
So-
think I can't figure that one out.
I know. And it's very hard to, from a parent's perspective, from someone who has two kids who are close in age, who is hoping for that splitting. That's not going to happen. It is very hard to understand, but the justification is that the way it works now with the splitting provides sort of an unfair advantage to families who have spaced their kids close together, who are going to be in college mostly at the same time, as opposed to families who have spaced their kids 4 years apart or more, don't get the benefit of that splitting. So it's giving sort of an unfair benefit to one group of students that it is not giving to other students. So
I had heard that, but I have
Yeah.
to tell you, I find that a little bizarre, that because they're really basically commenting on people's family planning practices, and that plus I just really don't believe, and I love that everybody's here understanding this, that when you decide when to have your kids, that you even understand the process 18 years later of what's going to happen.
yeah, I don't think that those parents of twins were not trying to work the financial aid
Right.
system. But
Right.
unfortunately, it looks like that's coming again, likely now for the 24-25 school year. So it's
It gives
something-
people a little bit more breathing room, but
Yeah,
but it's coming,
And the other thing I guess I'll say that about that a little detail that may be important is that even though they're doing away with that splitting for federal financial aid purposes, they are actually still going to ask on the FAFSA. They're still including the question about how many kids you have in college on the FAFSA, so that if a college wants to include that information, wants to keep doing the splitting of the contribution for families with multiple kids, they can. They will have the information. So it's going away. What we know for sure, I guess, sure as we can be, they can pass new legislation, do whatever they want anytime. But as of right now, the splitting for federal aid is going away, but colleges still get to decide what they want to do for their own institutional aid. So it is very possible that some schools will say, we don't think this is fair, and we're going to keep splitting for our own institutional aid. So a lot remains to be seen. I think I was actually at a meeting recently of the Massachusetts, where I live, financial aid administrators, where there was a session about this. Colleges were talking about it. Most colleges, as far as I could tell, do not know what their game plan is at this point. It's all brand new. They have to figure this out. So don't want to be all doom and gloom. Depending on where you're applying, it may still be taken into consideration for institutional aid, but that part remains to be seen.
Okay, good to know. And again, even savingforcollege.com, we'll keep everyone posted on updates with that, because I think they've mentioned they're going to be doing a phased implementation of the changes. Right. So we'll keep everyone posted. And with that, it's time to move on. Sometimes, of course, financial aid might not be enough. So let's start talking about student loans, how to get a student loans. I know a couple of people had already asked with the registration, how do you apply for a student loan? So Shannon or Debbie?
Well, I would just start a tiny bit back, maybe to kind of fill in what Shannon started talking about, the different types of federal student loans, and then moving into private loans, because depending on what you're going to apply for or what you're going to take, that's going to determine how you're going to apply. But one thing that I want to emphasize, I'm sure Shannon and Katie would agree, is that the reason why we spent so much time talking about the FAFSA and the federal student loans, which you might see them, they might be referred to as direct student loans, or Stafford is an older term, the Stafford loans, is that those are the only, well, I'm going to preface that, the only loans that your student can take out on their own, in their own name, without a cosigner. So that's why they're so important, is that you want your student to always max out the federal student loans that they can take out through the program. And Shannon kind of quickly mentioned that each year there's a limit. So freshman year, they can only take out $5,500 in the federal student loans, sophomore year at $6,500, and then junior and senior year at $7,500. And that may not be enough, but at least you want to always, if you need federal money, you should, or sorry, if you need need to borrow any sort of money, you should always, your student should always be maxing out and taking that money first, because it's going to be the money, it's going to be the loan that's going to be in their name only, no cosigner, and usually it's also at the lowest rate that they could possibly get. So again, just emphasizing, that's why it's so important to fill out that FAFSA. They're not going to be able to get those loans, and those loans are going to be the best loans that they should use first, and then figure out how much more they need after maxing out the federal loans, the federal student loans.
Yeah, so I have little to add. I guess just then the next step
Yeah.
after taking advantage of the subsidized, unsubsidized direct loan that the students can get, if that's not enough and you need more, that's when you have some options, one of which I referenced is called the Direct Plus loan. It's for parents to borrow. It's in the parent's name. FAFSA is still the first step, but then you also need to go to studentaid.gov, the federal government website. They're going to run a credit check on you. So you do have to be able to pass a credit check to borrow the plus loan. And there's no cap on the amount of the plus loan. You can borrow up to the total cost of the school minus whatever other financial aid the student is getting. So you can borrow large sums of money in a plus loan. That basically, as long as you can pass the credit check, nobody's cutting you off. So
which is what probably has caused some of the issues that we're dealing with today. Yeah,
certainly.
Mhm.
So the plus loan is one option if you need more money beyond the student loans. As an alternative to that, some families choose to borrow what we generally call a private education loan, where you go to a private bank, apply directly to them. They will also run a credit check. Every bank is a little bit different. Usually the way they're structured is that the student is listed as the primary borrower on a private loan, but because the kids tend to have, no credit history, no income, all of that good stuff that lenders want to see and their borrowers to have, the kids will almost always need a cosigner, and usually it's a parent that cosigns on the loan. So it's either, depending on what you're looking for, parents totally legally responsible for the plus loan, or private loan where likely the student is the primary borrower, but parents are on there as a cosigner. And another option that a lot of families will use if they own their own home, they've got some equity, will be a home equity loan. So that would be another option where you would just go to your bank to take out a home equity loan.
And just to give people an idea of what the rates are, and they also they officially go into effect July 1st. But I think they kind of came out a few weeks ago. They were announced what the new rates are going to be for July 1st. And so the the direct student loan rates are 3.735. There is a small origination fee of a little over 1%, 1.062. And then for the plus loan, and I'll tell you why I'm telling you the rates just so that you know, but this also is going to relate to why you may or may not want to look at a private loan. The plus loan this coming year is going to be 6.284%, with an origination fee of 4.248%. So I didn't do the exact math, but I'll just tell you that if you factored in the origination fee, which is something you should do if you're going to be comparing loans, my guess is that the rate was probably closer to 7% on that plus loan. And so this is the kind of thinking that you need to consider, and is that, can I get, now that my student has maxed out the direct federal loans, we need more. My choices are a parent plus loan, a private loan, potentially a home equity loan. And so this is where you're going to need to be comparing rates and understand all the different features and the trade-offs of going one route versus the other. And you need to, I tell people you need to shop around. You need to kind of gather your information so that you can make a decision. And I noticed there was a few questions that were sent in ahead. I get this question all the time. Where is the best loan? Where can I get the best private loan? And in some ways, I can't tell you, because your interest rate is going to be determined based on your most likely your credit worthiness, as the co-signer. So that's why I encourage people to go through a phase of shopping. Like, you need to kind of go to different lenders, and we can tell you how you can do that with, gathering the information, and then bring it all together and then weigh all these options. You got the Parent Plus loan, maybe it's close to 7%. You got whatever interest rates that the private lenders are giving you. Maybe you want to tap into your home equity and kind of lay all this out. And then that's the best way to make a decision. You can't just go off of, oh, my neighbor said, bank X, Y, and Z, they got a great rate. They might have gotten a great rate. You don't know if you will get the same great rate.
Okay. Yeah, that's helpful to know. Someone is asking, I know you mentioned the home equity line of credit or home equity loans. How does that work with financial aid?
That should not affect the financial aid calculations at all, unless the only way I could see it happening is if you borrowed, a big old home equity loan and then only spent some of it. Like, let's say you borrowed enough for all 4 years of college, but only spent a portion of it on the first year, and then had a whole bunch of cash left over from that loan sitting in the bank. Then potentially that cash could affect the financial aid calculations.
But that's why you want to do it as a line of credit. So you're only taking out what you need. Yeah.
Yeah. And then it shouldn't affect the calculations at all.
Right.
Okay. Good to know. Thanks. And then we also had a couple questions regarding a student who's on a visa and their eligibility for student loans, and then also U.S. students who want to attend college abroad. Are there anything that these types of students need to know when applying for student loans?
Yeah, so for the students on a visa, it is difficult. I'll just say that up front, in that you do not qualify for the federal government loans, subsidized, unsubsidized student loans, the PLUS loan, if you are not a US citizen or permanent resident. So students on visas will not qualify for those loans. So essentially, you're looking at private loans, and most private lenders will not lend to someone who's not a US citizen or permanent resident unless they have a co-signer who is. So if you have a US citizen who's willing to sign on the dotted line for you, that is essentially the way to get a loan as an international student. I will say there may be some private lenders that may be willing to lend to you. The one big one that I know off the top of my head is it's a company called Empower Financing. I have not worked with them. I cannot vouch for them, but I know that they do lend to international students without a co-signer. So that may be one to look at. You could also look for, financing in your home country may be the way to go as well. So it is more difficult for students who are on visas. For US students who are wanting to study at a college that is abroad, I will tell you, you can still potentially get the federal student loans that you're entitled to as a US citizen if they are at an approved college. And there are, I think it's about 500 colleges overseas that have gone through this like US accreditation process to get approved for US federal student aid program. So you would still do the FAFSA and you can still get those student loans that you're entitled to take to your overseas school if it is on this list of approved colleges. And I will tell you, a lot depends on the country you're planning on studying in. There's lots and lots of approved colleges in Canada, in England. If you're looking to study in China or India, there are very few approved colleges. So that's what you have to think about there.
And the only thing I will add to what Shannon is saying is that because of the uncertainty, I would be researching this before even potentially applying to some of these schools. Like, you don't want to be in the position at the end of the process saying, I've committed to this school, now I have to figure out how to finance it, and then run into the roadblocks that you can't get any of the money you need.
Yeah, that's a good point. And we just shared a link to a tool on savingforcollege.com where you can actually look up international schools and see if they're eligible for federal aid. So that's in the chat box. Okay, so we kind of talked about the differences. Are there any more key differences? I mean, we talked about the different interest rates you can get. Someone asked about payment flexibility between federal and private loans.
Yeah, the other thing I was just going to bring up is the different, features that a private loan has. So it could potentially be a little bit more flexible to fit into your budget. So, going back to the plus loan, if you need money beyond the federal the direct student loans, it's a flat rate. It's a 10-year repayment, but there are fallbacks, if you run into issues. But if you have good credit, there is the potential, and again, this is why you should check to get a lower interest rate with a private student loan. And in addition to a lower interest rate, and this will vary by lender, they might give you the option of choosing to different terms to repay the loan back in. So you might be able to pay it back in 5 years, in 8 years, in 10 years, and 15 years. So you might, and every time you change that term, it affects what your monthly payment would be. So you can start to fool around with, well, maybe I can pay this back faster. And so the total cost of borrowing that money will be less, or maybe I need more time. So they give you that flexibility to choose how long it's going to take you to pay it back. That's one thing. They also, you would have the flexibility of choosing a variable rate for the loan versus a fixed rate. That again might come down to how quickly you want to pay the loan off, and kind of honestly what type of risk aversion you have to whether the interest rates are going to change. So you do have some flexibility, potentially some flexibility with a private loan to kind of configure it better for your situation, but you won't have some of the fallbacks of what the federal loans are going to provide you. I think there was a question, of course, if there's any sort of forgiveness, it's not going to apply to private loans. So these, again, kind of like that, those trade-offs and the pros and cons that you need to weigh off each other.
Right, right.
And I'll just follow up with that, is that in terms of the fallbacks that Debbie's talking about, there's, just to dig into a smidge more detail on that, there's something called deferment, where if you went back to school for graduate school, you can automatically defer any federal loans that you borrowed. Whereas that with a private loan, that's more kind of at the discretion of the lender if they want to let you defer it or not. There's certain guarantees in place with the federal loans that are nice to have, and you got to kind of weigh that against potentially, can you get a lower interest rate with a private loan? Maybe yes, maybe no, but you got to weigh those things. The other thing that I would call attention to in terms of the federal protections is death and permanent disability cancellation. That I think is really important. And as a parent or a student, we don't like to think about these kind of worst case scenarios when we're making the exciting decisions about choosing a college. We don't like to think of worst case scenarios, but I think if you're going to be borrowing large amounts of money, you do want to at least have it on your radar. The federal loans are guaranteed to be canceled in the case of death or permanent disability. Private loans, some of them have started to offer that protection or similar protections, but not all of them. So it's definitely something to look for and consider as you're shopping around for a loan.
And it is another reason why, if you take a private loan, it's also sometimes recommended that you get life insurance on your students, which honestly at their age is not that expensive. So, but it's another thing to think about and to factor in.
Okay. Yeah, that's important. Let's move on to the next topic because I know we've already gotten some questions on this as well. How much to borrow? So, I mean, I know we talked a little bit at the beginning about the student debt issue in the country and how do we avoid that, and what's a good amount to borrow? What do you both suggest?
Yeah, so unfortunately, I can't pinpoint a certain number that's going to apply to every family. I think for most students, you are probably safe taking the maximum you're allowed in the direct student loans. If you add up the 4 years, the 55 to 7,500 a year, it totals 27,000 over the 4 years of college. I think for most students with your first job out of college, you can probably pay those loans back. Depending on what happens with interest rates, we're looking at probably something like $300 a month in monthly payments. I think that's likely doable. It can be a challenge, but likely doable for most college graduates with their first job out of school. When you go beyond that, that's when I think you just have to be very careful and make sure you understand what you're getting into. So when you're going beyond the direct student loans, looking at a plus loan or a private loan, I think you want to make sure you understand a couple things. What the amount you're going to borrow, what that actually translates to in monthly payments after, either right away if we're talking about a plus loan potentially, or a private loan, or if you're going to defer the loan after graduation, what those monthly payments looks like. It's very easy to sign on the dotted line. Sure, I'll borrow $10, $20, $100,000, but do you know what that means? I know that savingforcollege.com has a good loan repayment calculator that can help you figure that out. So you want to know what that bottom line looks like. Also, as a parent, thinking about, of course, 4 years of school for this student. And do you have other kids? You need to multiply that by 2 or 3, depending on how many kids you have. Maybe that $10,000 loan for your first year for first child seems doable, but multiply it by 4 or 8 or 12, depending on how many kids you have. Is it still affordable when you add up all of those monthly payments? So you need to know what it translates into terms of monthly payment. And then the other thing I think about is your income, either as a parent or the student's potential income, if they're going to be paying the loan, if they're going to be the ones paying like a private loan back. What is their income going to look like after graduation? And of course, that's really tricky. With the parents, we know our income, for now. We can always lose jobs. So, you need to think about that. But for a student, what's their income going to look like after college? And, some students know exactly what they want to do. More students don't know exactly what they want to do when they're going to college, or if they think they know, they change their mind. So there are tools you can use. The Bureau of Labor Statistics has what they call an occupational outlook handbook, where you can see like average salaries for based on career field. There's another kind of cool website called mynextmove.org that has kind of a cool interface to figure those kinds of things out. So you want to compare, find out what those loans are going to cost you in terms of monthly payment. Compare that to, monthly income. Can you actually afford these loans? So those are the things I think you need to think about when figuring out how much is too much to borrow, or how much is an appropriate amount to borrow. You want to actually do those calculations. I know one rule of thumb that I kind of like, because we like rules of thumb because
Right.
it's easier to do than the calculations. But a rule of thumb that I've heard that I think makes a decent amount of sense is you don't want to borrow more over your 4 years of college total than what you anticipate your first year salary to be getting out of school. So again, with the direct loans where it totals 27,000 over 4 years, yeah, college graduate will probably be making at least 27,000 right out of school. But will you be making 80,000 or 100,000? If not, you probably don't want to borrow that much money in student loans. And I think parents need to do some of the same calculus. As a parent, if you're making, $75,000 a year, maybe you could afford to take on $75,000 in student loans or in parent loans. But I think as a parent, you're in a better position where your actual budget and all of your expenses. So, even if that rule of thumb says you can borrow a certain amount, if you have no money left at the end of the month, you spend every dime you take home, then maybe you shouldn't be borrowing anything, or you've got to take a look at that budget and figure out what you can redirect.
And I think what's so hard about kind of getting your arms around this question of how much to borrow is that you're actually trying to look into the future, right? And you're trying to estimate where your student, you know, what career they might be interested, what type of job they're going to have. And as Katie and Shannon and I were even talking before we got on today, what I found in this, you know, space of paying for college is that when we talk about paying for college, it usually immediately relates to student loans. So what loans should I take out? But really the discussion about how much to borrow and how I'm going to pay for college, and goes back honestly to before your student even starts the college admissions process. And so that is, you know, in the ideal way to handle it, but let's put out the ideal, because maybe if there are people out here who haven't started the process yet, this is really the way you should. So part of that, and the reason why people don't start there is because there's a lot of knowledge you need to have. A lot of what we're talking about today, you need to know to even start this analysis or discussion. So you need to understand, you know, how much my student can borrow on their own, what colleges they might be interested, how much those colleges going to cost, will, you know, what the estimate of that college is going to be to me, to my family. And you might not have real, I mean, you'll have real numbers. They may not be concrete numbers. They may not be the numbers that you're gonna, you know, hold your hat on, you know, that are gonna happen at the end of the process. But you should still put some sort of analysis together at the beginning. And quite honestly, what we do with families is we have a spreadsheet, and we kind of even to start with your state school, to use that as the basis and say, this is how much the state school costs. How much can you as a family contribute? Your student, you know, your student's going to take out this amount of loans. So what's left, you know, and don't just do it for 1 year. Do it for the 4 years. And that's just one school, but then you start to get an idea. Okay, how much is that state school going to cost me? And then you can, you know, start to extrapolate. Okay, if that's how much I'm going to have to borrow, then by default, in theory, my child's going to have to get a job that has this type of salary, or as a parent, I'm going to have to make up the difference. And so those numbers become a little bit more real at the beginning of the process. And then that also starts to tailor maybe what schools you end up applying to. And so I just put that out there because I get too many questions from families, and I just helped a family the other day, and it's at the end of the process, and they never looked at all of this. And so now they are saying, okay, I got the tuition bill. This is how much I can spend. This is what my student is going to take out in the federal loans, and like, oh my gosh, I didn't know that that's what the difference is going to be. And now I've got to find loans to cover the difference. It's just, they're in a different situation, because at that point they've committed to a school and they can't, I mean, they can uncommit, but they've gone through the whole process. And so they have a different set of options that they can do, versus if you know all this information at the beginning, you can tailor your whole college admissions process much better, so that it combines both what your student needs, you know, socially and academically, but also what you and your student need financially. And unless you do this analysis and thinking up front, you might be blindsided at the end.
Yeah, I could not agree with that more. You really should be doing these calculations, you know, I would say at the beginning of high school, and doing the calculations and having the conversation. So not only do you know what your bottom line is, your child knows what your bottom line. And you can have the conversations where maybe you can apply to this school, but if you don't get X amount in scholarship money, you are not going. And we're going to look at some other options, and making sure that you have a nice balanced list of schools that you apply to, and you will end up with a number of those to choose from, and you can compare financial aid scholarship offers to find the one, or hopefully many, if you've thought about this and incorporated this into your process up front, that meet your bottom line and meet your child's needs academically and socially and all of that good stuff. There are something like 4,000 colleges in the country. We often only hear about, 20 or 30 of them on the news, but there are hundreds and hundreds and hundreds of great colleges out there. There will be ones that you and your family, your child can afford. It's just a matter of the key process, I think, to this whole thing is designing a college list that is going to offer you some really great academic, social, and financial options.
So, to answer the question, how much to borrow, as Shannon gave the the easy rule of thumb, don't borrow more than what your student's first year salary might be. You may choose to borrow more than that, because that rule of thumb is really only for the student. And so then the parent needs to think, how much am I willing to contribute to this process? And that's kind of, that's the delta that, as a family, you have to figure out, how much am I willing to help my student, pay for college. And the reality is, unless you have some savings, you're going to have to participate some way or the other. You're going to have to participate in either, paying towards the tuition bill, or at a minimum being a cosigner on a loan, or taking out the Parent Plus loan, because there's very, very, very few students and families and colleges these days where you can find the college and all that student needs to do with is borrow the federal student loans, unless there has been savings available from the family.
And this, the other thing I'll throw in, I don't know if it'll come up elsewhere. The other way to pay to look at is a tuition payment plan. So oftentimes we think of what we have in savings, and if the college is going to cost us more than what we have in savings, we think we can't afford it. Or alternatively, we just think about the student loans and, how much can I borrow? Whatever that college is going to cost me, I'll borrow that much, whether it's wise or not. But the other sort of resource, other than saving and borrowing, to think about is what you can pay out of your monthly cash flow, out of your paycheck, just like you pay all of your other bills. I found that there's one of my colleagues at Bright Horizons, college coach, that refers to tuition payment plans as the unsung hero of the college payment process. Sometimes they're not really kind of widely advertised and shown on the college's websites, but I would dig.
Not all colleges have them though, right?
Not all colleges. I've seen at most colleges, they seem to have them, sometimes again hidden, but
Right.
I think most colleges do have them. But just to step back in terms of what that is, at most colleges, the sort of default option is you're getting 2 big bills per year: big bill for the fall semester, big bill for the spring semester. But many colleges do offer this option of a tuition payment plan where you can split up the bill over, depends on the plan, 9, 10, 12 months, basically split it up over the course of the year. So if you haven't saved a ton, if you don't have a big chunk of money sitting in the bank ready to pay that big fall semester tuition bill, but you can think about your monthly cash flow, your paycheck, can I budget, $500 a month to pay towards the tuition bill? That's a really great way to cut down on what you might need to borrow. The tuition payment plans, they do generally have like a small sign-up fee, like maybe like $50, something like that, but they generally don't charge you interest. And that's in contrast to the student loan. So they're going to be a much less expensive way to pay the college bill. If you can take a look at your paycheck, figure out how much you can pay on a monthly basis, that's something to look at, before you go to the loans. Figure out, what can I pay out of my savings? What can I pay out of my monthly cash flow? And then whatever's left, is that a reasonable amount to borrow?
And I'll just throw out, because I don't know if somebody will ask here, but I've gotten this question too: can I pay tuition with a credit card? And maybe there are a handful of schools that let you do that, but the majority do not. And people ask that not even to spread out the payments. If they're thinking, well, I'm going to get the points.
Yeah.
I wish, but unfortunately, it just doesn't. They don't allow that.
Okay, well, we're actually coming up to the end of the hour in just a few minutes, and I do want to touch on repaying student loans. So, I mean, we know that there's student debt crisis, and a lot of people are having trouble paying their student loans. So maybe if you can each just give a quick explanation, maybe of like the different repayment options, maybe even forgiveness or refinancing, just real quick to let everyone know that there are options if you run into that situation where you have trouble paying your loans.
Yeah, I would say if you're running into trouble, you think you're not going to be able to make, your next loan payment, contact your loan servicer. There are options to help you with the federal student loans. At least there are a number of different repayment plans you can choose from. And just because you made one choice up front doesn't mean you have to stick with that for your whole repayment time. You can change it. The standard sort of default repayment plan is standard amounts over 10 years. but there are graduated plans where you start off with small payments and they gradually increase. There's extended payment plans where you stretch it out over up to 25 years instead of 10. That will get you smaller monthly payments, but will cost you much more in interest because you're paying over a larger period of time. There are a number of different, just to make things confusing, income dependent repayment plans where basically you're paying a percentage of your monthly income. It's often 10% of your monthly discretionary income, which is to get technical, your income above 150% of the federal poverty line. But there are options. There are different payment plans. If you're on a standard plan and you can't afford that payment, maybe switching to an income dependent plan will make the payments more affordable to you. There's also deferment options. If you're in economic hardship, maybe you've lost your job, you may be able to defer the loans for that reason. Though honestly, in that circumstance, I would get on an income dependent repayment plan where you're paying 10% of your discretionary income. If your discretionary income is zero, your monthly payment is zero. So that may be the better option. So there's also something called forbearance, which is sort of like a last resort. If you don't qualify for a deferment, the income based, there's just going to give you bigger payments. You can put your loan in forbearance where it doesn't, your credit is, you can stop paying for a while. Your credit is not hurt, but it will accrue interest and all of that. So that's kind of the last resort option. But talk to your loan servicer because there are definitely options. Look at studentaid.gov, kind of describes all of these plans. They have a calculator to figure out what your payments would be on these different plans. I think actually savingforcollege.com has one too. If you work in public service and make on-time payments for 10 years, the remaining balance is forgiven if you're on one of those income dependent.
But everything you're talking about, Shannon, just to reiterate with people, refers to the federal loans that they have.
Correct. Yes. Yeah. So all of these are sort of the protections and guarantees and nice things about the federal loans that you don't necessarily have on a private loan. With a private loan too, if you're having trouble making those payments, contact your loan servicer because they may offer you some flexibilities as well. You can't make sort of general across the board statements because it's up to each lender.
Okay. And then there's also for private loans, at least, I mean, I guess any loans for refinancing.
Yeah, so you could definitely, I know Saving for College has a list of student loan refinancers you can check. You can check with any banks that you use. But what you'd want to look for, there's lots of people that would be willing to refinance your loans. You want to look at what interest rate they're offering you. Is it better than what you currently have? Are they charging you any extra fees? And you have to be particularly careful, I'd say, thinking about refinancing federal loans. Because those have those protections built in. If you refinance with a private lender, all those protections kind of go away, and like public service loan forgiveness potential, if there are new forgiveness programs in the future, which there may be, that potential may go away if they only apply to federal loans. So you have to think very carefully about refinancing a federal loan. It's kind of generally a clearer decision with a private loan. You know, you're looking at the interest rate and fees and repayment terms. If they're better than what you have, then that's when you might want to refinance. And
also something to think about is, kind of shore up or make your credit as best as possible before going out and trying to refinance. I mean, that's the way that you'll get potentially a better rate. So don't think that I just graduated and now I'm going to try and refinance all these loans, because a private lender in particular, wants to see that you have a history of good payment, that you actually, have a steady income. So that might take a year or two after graduating to build up that, record of a good financial history, and then go and try and refinance if you have private loans. But so just something to think about, that you just want to get your financial health and house in order as much as possible before you go out and see if you can get a better rate.
But just the other thing to throw in there, I know we have zero time, Katie, but I probably should have mentioned it. Because I was talking about being sort of wary of refinancing federal loans. If you have kind of too many federal loans spread out over different servicers, and that's what's causing you repayment trouble, you can they don't call it refinancing, they call it consolidation. Consolidate into a direct federal consolidation loan. It's another government programs where you can put all of your federal loans together, get them all in one place, make it so you just have one monthly payment, and they average all your interest rates together. So studentaid.gov is where you can get more info about federal loan consolidation.
Okay, great. I know we are running out of time, but we've been getting a number of questions and we still have a lot of people on the webinar. So maybe if we can quickly, if you don't mind, Shannon and Debbie, quickly touch on options for parents and mainly graduate students. I don't think we talked about that. A few people have asked if graduate students also fill out the FAFSA and what kind of options are there for them.
Yes, so graduate students can and likely should fill out a FAFSA if they want to take advantage of the government student loans. You can actually borrow more government student loans as a graduate student, whereas we talked about this undergraduate limits, $5,500 to $7,500 a year. With graduate students, it's more like $20,000 a year. For most graduate programs, if you're in the health professions, it's up more like $40,000 per year you can borrow in the unsubsidized direct loan only. Unfortunately, they don't have subsidized direct loans for graduate students. It's just unsubsidized. And we talked about the plus loan for parents of undergraduate students. There is what they call the graduate plus loan, or grad plus they call it for short, that graduate students can borrow to make up any difference, beyond about the $20,000 that you can borrow in the unsubsidized. If you need more than that, you can borrow a grad plus loan. They do run a credit check, but having no credit essentially is okay for the grad plus loan. They're just looking to make sure you don't have any significant negatives in your recent credit history. So if you're a graduate student coming right out of undergrad, perhaps with not much credit history, that should be okay for the grad plus loan. So it's another government loan that grad students can borrow. Grad students can also do the private loans that we've talked about. Again, if you have limited credit history, depending on how old you are when you're going to graduate school, you may still need a co-signer on a private loan, just like we talked about for the undergrad loans.
Mm-hmm. Okay. Well, as I mentioned, we are coming up at the end of the hour. So I just want to say thank you so much, Shannon and Debbie. We really appreciate your insights. And I know you've helped a lot of viewers today, so we're thankful for that. And for everyone who's still on, if you did decide that you want to look into private student loan options, I just wanted to quickly let you know about a special offer from Credible. You can check and compare rates from multiple lenders at Credible. And for this month, when you receive pre-qualified student loan rates, Credible will send you a $20 gift card. So if you're interested in that, look for the link to the offer and more details in our follow-up email. And again, that follow-up email will also contain the link to this recording. So thank you everyone for joining, and I hope we answered most of your questions.
Thanks. Thank you for having us.
Bye-bye.
Bye-bye.